Finance ministers and central bank governors from nearly every country on the planet are gathering this week for the spring meetings of the International Monetary Fund and the World Bank. 191 countries will be represented. That makes this one of the most consequential rooms in global economic policy and one of the most watched. These meetings are not a summit in the traditional sense. There is no single declaration, no binding agreement. What they produce is something more subtle and in some ways more powerful. Updated economic forecasts, formal communiques, and perhaps most importantly, the back-channel conversations between finance ministers and central bank chiefs that rarely make headlines but often shape policy in the months ahead. This year, the backdrop is unusually tense. Global growth remains under question. Inflation has come down from its peaks in many economies, but the path back to target is uneven. Trade tensions are adding a new layer of uncertainty to forecasts that were already difficult to make with confidence. Against that backdrop, the signals coming out of Washington this week carry extra weight. The IMF will release its World Economic Outlook during the meetings, a closely watched report that lays out where the fund sees global growth heading and where it sees the biggest risks. Revisions to those forecasts, even modest ones, can move markets. A downgrade to global growth expectations, or a warning about financial stability, tends to sharpen attention fast. The World Bank's focus runs alongside, but separately. Its core concern at these meetings is development finance, how lower-income countries borrow, how they manage debt, and whether the capital they need to grow is actually accessible. Debt burdens in a number of emerging economies remain elevated following the disruptions of recent years, and that issue is likely to surface in formal sessions and bilateral talks alike. For market participants, three things are worth watching. First, any shift in tone from major central banks, the Federal Reserve, the European Central Bank, the Bank of Japan, and what their governors say publicly and privately about the rate outlook. Second, the IMF's updated growth and inflation projections, and whether they reflect a more cautious view of the global economy. Third, whether there is any coordinated language around currency stability or sovereign debt, two areas where disagreement among nations has been visible in recent months. The meetings do not set policy directly, but they shape the conversation that does. When 191 finance ministers and central bank governors are in the same building, the tone they set and the consensus, or lack of it, they signal tends to echo through markets for weeks afterward. Watch the forecasts, listen for the tone, and track where the disagreements surface. This briefing is brought to you by First Financial News, clear daily coverage of the economy and markets at firstfinancialnews.com.